Hi there, traders. This is Brad Goodwood with the FX Market Insight for the 28th of August. All right, as we come out of that North American session, we are seeing a little bit more dollar weakness in the market. It's not profound, but we are seeing some decent clean outs in some of these currency pairs. Now, Euro, that we were talking about yesterday, had slowly ticked up above the trend line there around 116 the figure. Strong German IFO numbers. Now, I sort of highlighted this at the end of yesterday's FX Market Insight. The IFO numbers, historically, very robust, important, well-respected. They have been sort of pushed aside, the last number of months because of all the geopolitical crap. But funnily enough, that geopolitics sort of drifts out of the market. The IFO numbers come out strong, and that's what we've seen. We've seen euros slowly appreciate to the top side. Now, Aussie and Kiwi, they are correlating very high as per usual, but there's no sort of real clear direction just at the moment. They both look like they want to go higher, but they've got really mixed sentiment. Fundamentally, to the technical aspect, there is a very skewed picture, and I'll come into that in a little bit. Dollar yen, once again, the cooler's gone off on dollar yen. The beast has gone quiet. If anything, it looks like a bit of a break trade opportunity here at the moment. It's just breaking down through the support trend line. If it goes down through the cloud, you'd expect it to dribble a little bit lower as Japanese traders would be selling on a breakthrough there. Sterling, it's doing a good job. It's slowly climbing. As you can see, it's breaking through resistance. It's lacking serious momentum because we haven't had that big ball breaker bit of either US or UK data yet. We do have US consumer confidence numbers coming up at the end of today, so that's where we may see something happen there, but it looks like it's ready to go. Now, dollar CAD, now, there's a lot of talk here, and I'll show you this in the news in a second. There's a lot of conjecture around NAFTA. The US have signed a deal with Mexico. There's a very strong feeling that it's going to be good for Canada, and we may see that continue to rally. Oil also, OPEC have sort of reduced supply, so there's a little bit more of a down move in oil, or up move, I should say, which goes in with that down move in dollar CAD. So that's where the major currencies are. Okay, so when you do come back to say, you see what's going on here, and you see euro as the major catalyst, I would always come back and check out what data was out yesterday. This is a bit of a way to test if normal market conditions or how market conditions are. Now, the IFO business numbers, the climate conditions, expectations, all much firmer. Okay, that's a really good sign for the euro to see the German sort of sentiment really come back in positive after all the other crap that's going through. So that's the main reason why euro went up. Now, if you look down here through the rest of what's coming out over the next 24 hours, there's not a hell of a lot. Okay, we've got those US consumer confidence numbers, and the Case-Shiller numbers, housing numbers, used to be very high impacting, but they've been pushed aside a bit. So what we've got is we've got current sentiment, a little bit of dollar weakness in the market, and we've got a long wait until we get this directional momentum data. So you have to think that this sort of dollar weakness is going to sit in the market until we get these numbers out. And that's what I'm sort of thinking at this stage. So the major currency pairs, you're looking for potential opportunities to get into some of these trades. There's a few opportunities boiling. Now, if you come back across to some of the key talking points, obviously the US dollar, short term, it's only over the course of a week, has had enough. It's just drifted down. You can see the breakdown here through 95 the figure, and that's what we're seeing at the moment. It's just holding below that support trend line. Now, fundamentally, it's still strong. I know the Fed governor chairman, I should say, was talking about, inflation's, they don't think inflation is going to go above their threshold, which is, their idea of being neutral. Dollar yuan, or the offshore dollar China. Okay, now the PBOC, there's a lot of talk around how they're going to protect this level at the top here, which is $7 to the yuan. So what they're going to do is, so the PBOC are actively trying to push this thing down, but they are going to be moving everything, because all the traders know the increase in tariffs from the US is going to really push or weaken the yuan. Now, the Chinese are very worried about capital outflows. If the yuan keeps depreciating, cash is going to come out of China. So it's a bit of a catch-22. The tariffs are going to screw them, but then the weaker yuan, which offsets the tariffs, is going to see a lot of capital outflows because people don't want to see their money just fall away to nothing. So this is going to be an interesting battle. I think what we're going to see more of as we go through over time, as these tariffs start to kick in, we're going to see the PBOC pushing it down. We're going to see similar strong up moves on the back of the fundamentals, which is basically going to be weaker yuan. Okay, so that's going to be one that we need to keep following. Now, there is talk of also, if I just come back over here to get the news up, how the PBOC, no one really knows what they're doing. They're talking about some new fixing regime that they're going to be doing. Revives X factor for fixing. Like, give me a break. Okay, so they're going to get aggressive. They can't, this is where they're going to be pushed into a corner because you can't be overly aggressive and keep pushing up your currency if the fundamentals are weak. Their currency is not floated as such. Now, their economy is moving towards a bit more of a floated economy, but this is going to be a little bit tricky as they try and get into the free world as such. Now, let's look at the other news here. There's a lot of focus here on Mexico. Now, US equities, Mexican equities and Canadian equities all sort of through the roof, up about 1%. Now, there's pressure on Canada to join the party. It's all about auto sales, right? So the US car industry has just been crushed by everyone over the last sort of 10 or 15 years. They're looking to get tariffs on anything coming into the US, right? And they're looking to sign a deal. So, I mean, as it is, it's supposed to be positive for the Canadian dollar. I think that's a bit high speculation at this point until they sign something. Oil producers cut July output by 9%, 9% more than agreed. So this is OPEC. I mean, these guys are the biggest crooks in the world. They have just reduced output, so you'd expect oil prices to go up a little bit further. Then that's pretty much it. Turkey saying that there's going to be an increase in terrorism if the US sanctions kick in. That's all very interesting. We'll see how that plays out. So that's where we are with regards to the major pairs in the news. Right? You see where the US dollar is drifting lower. We've got some sentiment in the market there at the moment. But if you come back into looking at the, just come back to the MyFX Trading Hub. Okay, we've got 15 hours until the next major release. So if you're in the Asian session, you really don't want to be sort of wasting your time in front of the screens because the real major momentum is going to come from these US consumer confidence numbers. All right. Market-wise, the currencies are actually trading pretty well. The geopolitics is still hanging around and it could pop up. So I've still got that on sort of bit of alert, but they are starting to move a little bit freely. We're just lacking overall momentum on the US dollar and also in some of the other pairs. So, you're following the upcoming releases. This is where it gets interesting. And as I mentioned yesterday, some of the currency pairs are starting to change. They're right on the threshold of changing. What we've got is a change in the general technical outlook of the US dollar. Now, fundamentally, we've still got a sort of robust, strong outlook from the Fed, even though they are saying we are getting close to the end of our interest rate hiking cycle for the moment. That's put the US dollar sideways. Now, for those members who have access to the summary, not just the snapshot, you'll see that the general outlook here of Euro and Sterling, they're both bullish, but they're bullish for different reasons. Okay, you really need to click into that to see what's going on. Just to give you the heads up, like Euro, for example, is more of a technical trade, as is dollar Swiss. And then you've got the fundamental picture, which is more stronger for bullish for sterling and bearish for dollar CAD. So, as I said, you need to really go into those areas, and you'll see where that bullish and bearish sentiment comes from. And it's very important to understand what a technical trade is compared to one that has fundamental or a central bank sentiment along with it as well. So that's where the key to that's going to be. All right, so that's where we are on the major pairs. Now, just to keep an eye on things, okay, across the board, when you are looking at the technical picture of the major currency pairs, you should always consider, okay, the beast, which is what I call dollar yen. When it gets going, it is crazy, and when it's quiet, it's quiet. It's trading a little bit sideways at the moment, but as far as I'm concerned you've got to keep a close eye on the yen crosses. These are the major pairs for the Japanese traders. They are the most aggressive or the biggest FX country in the world. So you want to keep a close eye on this. So with the general outlook at the moment, okay, dollar yen sort of cruising sideways. Now this is obviously, as you can see, it's a dollar move, okay, because the single currencies themselves, Aussie's higher, Euro's higher, Sterling's a little bit higher, Kiwi's higher, and with that move in oil, you can see now CAD yen, the oil trade is moving higher as well. But what can happen very quickly, if there's an increase in tension anywhere, it will be picked up on dollar yen, and you'll see this thing crash, and that's where the opportunities are, probably more around the cloud at this point on a number of these crosses where you will see them disconnect from that dollar move and the yen will take over, and you could see potential moves to the downside. So I've got these on sort of low impact at this stage, low alert, I should say. When they do start to get closer and there's a bit more of a clear signal on dollar yen, that's when I really focus in on the individual crosses themselves and look for the key entries. But at this point, I think we're just going to start to see sideways trading activity with dollar yen. So that's the yen crosses. All right, guys, that's pretty much it. There's, this is about being professional trading. It's all about being patient and waiting for the opportunity to come to you. Now, if you jump in and start trying to push, say, the Aussie and Kiwi here, and if you go into that daily analysis summary, you'll see that the picture here is not so cool. This is more sideways than moving up like Euro did. Euro had that fundamental driver. These currency pairs are lacking that. Sterling, to me, is the dark horse where we could see a potentially big move. Unfortunately, we don't really have a key UK number to really give us that catalyst. So it's all going to be down to the US consumer confidence numbers. That's where the focus is going to be for the short term. So make sure you're tuning for that. Outside of that, you are just picking bits and pieces up off the floor. So you're either spending a lot of time for not much cash in front of the screens, or just wait for these, wait for the penny to drop where we get clear direction, and that's when you hit the market. All right, guys, that's it from me. Have a good trade day. We'll see you in the live trade zone. All the very best. Cheerio.